Good evening, everybody. How are we doing? Or good morning, if you're tuning in for them from the US or somewhere in a different time zone. I am just going to give it a couple of minutes, as I always do, to just double check that we are live. And I can see we are live. Good. So let me know in the comments if you can hear me okay. Today is, yes, if you're tuning in, let me know. All right, we've got a couple of people saying hello. Good. That looks all right then. And what I'll do now, make sure we got this up. Cool. Well, this is the Sunday market breakdown. So if you're joining us for the first time, I'll just say a few words about what we're going to be doing here today. So every week I go live and go over the trades that I've taken in the markets during the week. I explain why I took them. I go into detail in terms of like what happened on the lead up to them, why I entered, and then the trade management of them overall. And then once I've gone through that, depending on how busy the week's been, this one's been pretty busy in terms of like trades. A couple of missed trades as well, but nothing I could have done about that. Those happened overnight. And then we're going to have a look at the week ahead. So one thing I always do on a Sunday is look across what we've got happening in the economic calendar for the upcoming week, and then go into detail in terms of like certain levels that I might be looking out for on the charts. Of course, these are subject to change during the week, and when they do change during the week, it's actually in the community that I end up posting this stuff. So if you don't know about this is the Level Effects community. The link will be in the description if you want to join that. It's completely free. Basically just training people on how I approach the markets. Been trading now for the last 5 years, 3 of them profitable. I'm a funded trader, over $1 million in capital. And I'm just helping other people along their trading journey, try and do and achieve the same thing. If you put the work in and you actually go through what it is that I'm teaching you, then I'm pretty confident that you will actually find success, rather than hopping from one thing to the next and hoping that it's your strategy that's the problem, rather than working on the stuff that will actually get you ahead. So that's the Level Effects. You can join using the link in the description. But yeah, without further ado, I think we will get into it. So let's pull up the markets and run through. And by the way, if you have any questions that come up during this, the whole reason I do them live is so that you are available here live with me to actually ask the questions. So whilst I'll run through my trades first, if you do have a question, just pop it in the comments and I'll come to it as and when. But so trades, pound CAD short on Tuesday. So let's get straight into it. I know other people in the community were on this one as well. So pound CAD. There's actually 2 trades on pound CAD throughout the week. As you can see on the charts, this is the weekly. We're currently zoomed right out, so we can kind of get an idea of where we're placed in terms of price-wise. So we are approaching the highs. We haven't broken these highs since 2020. So pretty good area for shorts, which is one of the reasons why I was looking for shorts in this area. Now, if we go down the time frames, we can see that we cleared these highs the previous week. And then we had a nice strong move in to these levels. Now, at these levels, we had a weekly, which is the gold line that you might be able to see faintly on my screen. I'll just show you how I get that. So if we zoom back out to the weekly chart, you can see I like candle body closes. They work really well for pullbacks. So this being the weekly candle body close it meant that it was a pretty strong level. So whilst we were approaching this level on the day, that's when you kind of need to take into the context of what's happening in the markets. So on this particular day, we actually broke through the weekly level and then we just hovered there for a little bit. And I'd had this level just above here, which was around let me see where I actually took it from, the 17752 level. And the reason I refined my level to this, if you actually go back, I'm now on the 4-hour chart. So what I'll typically do is refine levels. Actually, it might be a daily because it's quite far back, this one. So we've got this long wick here, which I wasn't a particular fan of. When we've got a big long wick like this, I can expect a drawdown if I was to enter here of 46 pips. So I just dropped down the time frames to see if I could find a level that was more refined for this particular trade. And if we go back far enough, just scrolling back, if I can get there. There we go. So you can see I've refined that level to the 4-hour candle body close. And then I think there's a 1-hour candle body close just above there. But because the fact it's 7.4 pips, I don't care about that. It just means that, I can expect now a much less of a drawdown on this particular trade. So anyway, let's get right back to it. On the day, price moved in. It broke past the weekly level. And then we just kind of used it as a break and retest, meaning that price pushed up and then came back down and then used it as what you might call support, right? And then moving into Tuesday, price came up, actually tagged me in at this price, had an immediate response off that. We kind of moved 15 pips away. And then not a lot happened. I was waiting for this area here to get hit, this first area of potential struggle. So just for those of you that are new, the first area of potential struggle is where I think price is most likely to start struggling on this move. Now, why is that important? Well, that's important to me because part of how I trade is I always lock in profits early on. This might be a huge reversal point, but I don't care. I'm not looking for this to be my hero trade that, I make 6 months of income off of one trade. That's not how I do it. Plus, I don't want to leave a whole lot of risk on the table. We trade the higher time frames, so we're using the weekly, the daily, and the 4-hour to refine. And we're not going down to the hourly hardly ever unless it's a long wick. And I just don't even touch the 5, the 15, the 30-minute chart at all. So part of how I manage to keep trading nice and stress-free and pretty easy is by trading the higher time frames. So it's important for me to lock in profits early on, and you can see why just on this, because it was in fact that pound CAD wasn't actually ready to revert at this stage. So if I replay time, this is kind of like what I was looking at just before that level hit. And if I drop down to the 1 hour, we can actually play price and see what happened there. So we made a move and then we made a move up, and you can see within that 1 hour, we then pulled away from it again. So it's a strong rejection, but still price didn't seem to want to break back below this weekly level. So it was a bit, to be honest, this trade did have me not on the edge of my seat, but it was a little bit sketchy in terms of like pound dollar being the driving force or the main driver of what I could see going on back here, and we were not really moving away from this level. So the likelihood of us going higher was quite strong, but then we actually had a bit of I think it was pound news that came out and caused this big spike in price here. And that was enough to actually whip me out of the trade at about, I think it was around 30 pips. It was just 24 from there. So I took 24 pips, moved my stop loss just above the high. And then when price came out, it took me, so just to explain that, at the 24 pip mark, I took 80% of the trade off the table. meaning I took a partial where I cashed the majority of my profits. And then what I did is I left 20% running if this was going to be a reversal point, because then I can run the trade all the way down. And by the time it hits a nice buy area for me, I've already built a nice position with what I had left running. And sometimes it can go 2 or 3 times the size of the original trade, and it's no additional risk to me. So that over time works out really well. And the fact that I got tapped out here for around 6 pips with only 20% of the trade running, it was still a profitable trade for me. So yeah, that was the first pound CAD trade. That was on Tuesday. I had another one on Wednesday, which I'll come back to in a second. Pound dollar. This was nice. So textbook trade. Nothing difficult here. Again, the strategy is you just identify key levels. I'm not talking about support and resistance. And the reason I don't talk about support and resistance is because if price is moving up, I want to take a level that has previously been used as a short position. Whereas support and resistance and how they're usually talked about is that it's the same level. So support becomes resistance or resistance becomes support. And I don't trade that way. I try and use levels that have been used for the purpose that I'm looking to use them again. So in this case, when we pushed up here, we've been taking trades. If you've watched any of the other weeks back where I did the Sunday market breakdown, there's been, I think, 2 or 3 pound dollar trades leading up to the level that we're currently at. So pound dollar's been well and truly milked, which is nice. And so when this strong move came in, so we opened the day here and we moved up 70 pips. So what I was looking to do here is not take this previous level, because we'd already used that here. So that became a non-level for me. And then what I'm doing is I'm looking for the next most likely level that's going to get hit. So if we go back, I'm scrolling back on the 4-hour chart here. We had this level here where price had come down and then just kind of consolidated and then used to come down again. Now, in any other case, that wouldn't necessarily be a strong level for me. I would wait for a higher level, like somewhere up here that had been used after a really strong move in. This is a weekly level, which is why you can see this drawdown here of around 50 pips. That's fine though. But as price came up to here, I didn't expect it to keep going based on the context of the day. So we'd already moved 70 pips up, and the likelihood of us moving another 60 pips became less so. So the other thing that I'm going to use here for an identifier is average true range. So the average true range is the given price. It's what price is most likely, based on its historical data, how far it will move in a day. So it can be used as a nice indicator to see where price is going to exhaust today. So as you can see, we had this strong move in. I'll zoom in so you can actually see it because it's only a faint line, because I don't like loads of stuff on my charts. I like them nice and clean. But as you can see here, we moved up and average true range was hit. And that was the level that was closest to average true range. I love average true range to be breached and then a level get hit. That for me is a really nice sign that we're going to set up and we're going to have a pretty decent pullback from a particular level. So average true range was breached, got in at the level, and then price pulled back, and it pulled back to my first area of potential struggle. Now let's have a look at why this was my first area of potential struggle, and I wasn't hanging on for the Hail Mary trade that, we actually moved 120 pips off of this. So I could have potentially 4x'd my return if I didn't choose to cash 80% of my profits here. In this case, I actually cashed all my profits here, which was just a personal decision that I made at the time based on what else I had going on. Now, I also had the pound CAD trade, you remember. So this was still running from, it was actually, at this point, I don't think my stop loss had been hit on the running trade that I had. So when I've got more trades on the go, I might change how I manage new trades that I'm entering. So in this case, I just chose to cash 100% of the profits here. And I think I did actually post to the group that I may regret that, but nobody ever went broke taking profits. So that was just my decision to take that there. I thought pound dollar might move higher later in the week, but it wasn't so. The Dixie, the dollar index, was kind of doing some weird stuff. We dropped below the lows from before, and it became far less predictable for me to know what was going to happen, whether we were going to get dollar strength or if we were going to have some continued pound strength. In this case, what got us there was the pound strength. We had a bit of pound news in the morning, and then we pulled away. So anyway, that was how I managed to trade. Now back to why this was my first area of potential struggle. Well, first of all, we've got these wicks down here. So if I was just looking and zoomed in at this area here, this was the wick that I'd be looking at. However, we can actually zoom out a lot more than this and look at what happened previously. And we actually had these wicks here. So that, if I just put a level on that, you'll see that is where I had my first area of potential struggle. So that's where I cashed my trade. So that was pound dollar. If you guys have got any questions, pop them in the comments. But you know, the thing about this is the same stuff week in, week out. Like nothing new to show you in particular. Just the fact that the same old stuff just works over and over again. And so like this, if you can trade this way, it's so easy that you can spend 90% of your efforts focusing on your psychology. So working on things like journaling, working on things like how you feel in the trade, and just a lot more of a calm environment to trade from, rather than, you know, taking trades on the lower time frames and basically just losing your shit. So anyway, that's pound dollar. I'll move on. And if you do have any questions, just pop them in the box there and I'll come back to them. GN. So this was GN short from the 21435 area. This one was a weekly level and it happened overnight. So I just woke up to profits on this one. And because it happened overnight, I actually set my full take profit for this, because obviously I can't manage the trade if I'm sleeping. And what we had here is, let's go back to it. First of all, why did we take this level? Candle body close, weekly level, as you can see here. I have also got this trend line drawn in here. Now, just to be clear, I do not trade trend lines. I think for the most part, they're bollocks, but they can help identify which level is most likely to work. And in this case, before we had this push through like this, because this is price has actually pushed through now, but before that, I was looking at where price is most likely to revert from, and it lined up perfectly with this weekly level, which gave me more of a confluence to enter, knowing that it's another reason why this level might work. So what actually happened, I'm going to replay price on the 1 hour. Pull it back to here, because this was around the time I would have gone to sleep, even before so actually. This is the GN trade. Yeah, I think it hit around here from memory, but I could be wrong. So yeah, we were before ATR, but I pay a little less attention to that when we're trading Aussie and New Zealand pairs, just because the timing isn't the same. It's not the same day, right? So as you can see here, we hit ATR, but there was no pullback and there was no level around this area. We just faded up. So it's not a be all and end all, like if you hit ATR, you can take a trade in the opposite direction. Not at all. It's just a confluence. So with that, I set a pending order on the weekly level where you can see my first entry, and I set my full take profit just at the next level, thinking that we'd have a strong reaction off of this because we did previously. If I go back and look at what actually happened, which is something you can do to have an idea of what might happen when a level gets hit. This for me was 50 pips, so it was nice. The trade actually went a lot more, but you know, I'm asleep and I'm setting what I think is most likely to happen. So if you do this, know that you should really only do it on pairs where you have history in your trading journal. GN moves very nicely off of levels. Anybody in the community will also, that's been trading with me for a while, will understand that GN usually pulls back almost immediately. It doesn't hang about too much. So with that insight, price moved in. We had a small reaction off the level, but not a lot. Hit the level around 4 p.m. Then we had that big spike. Yeah. So I think my entry was just, I have to double check, but it may have just been above the trend line. But basically, it didn't happen when I was on screen anyway. So it happened around, the move actually happened around midnight, and we pulled away and we had a reaction off the next level down, and then pushed lower, pushed even lower, and then I believe we spiked back up. Let's just play that. Yeah, so we spiked right back up. And that was it, but we were already in the daytime by then. So when I woke up, came to the charts around 6 or 7, I just moved my stop loss to break even on that one, and accepted that it was a decent trade, worked off the weekly level, and gave myself a pat on the back for that one. So again, it's not really advised to be leaving pending orders overnight. It's just the fact that we hadn't had a major pullback from GN. We just kind of been creeping up to this level, and the strong weekly level on GN is almost not a given for me, but it's definitely one that I'm happy, based on my trading history, to set a pending order for. So that was GN. Now back to pound CAD. So pound CAD, obviously we had this spike and we got out with not a huge amount of pips, but still we managed risk. That was good. And then later, well, the next day we had this big push up. I mean, what I was going to say about this, really, it's same old stuff, working time and time again. So how do you find this level in a big wick? And I think I actually had someone in the community ask me, like, how did you manage to pinpoint that level? Like, where did it come from? And as you can see on this one, there was only 10 pips of drawdown, so it was nicely pinned. Go to the 4 hour, scroll back. Four-hour candle body close, just textbook stuff, same old shit every week. And ATR, let's double check where we were on that. We'd had the strong move in. We were past average true range, if you can see there. That's the line for the day. So we pushed up. I love the fact that we were past average true range. People might have been trying to take trades around here, but no, the key to winning on this stuff is just waiting longer than everybody else. So wait for the level to get hit, and then we had a nice move away. Then that move away, I cashed 50% of my profits here because I was expecting a bigger move. So we took 35 pips, cashed 50%, and then I cashed, let me work out my maths here. Basically down here, I left another 20% running. So I cashed another, let's say 30% of the trade once we hit the weekly level that I'd entered, that we'd identified earlier in the week. So that was an 80 pip move. So took the rest of that off the table. And then then what happened on Friday, I still had the 20% running. And on Friday, we just saw like CAD pairs going crazy. So I'll show you what I was looking at. I did a post in the group actually on this, I believe. CAD oil market flows. So at the time, because we didn't have any high impact news coming out, what I thought was happening was that we were having a big sell-off in oil, and it was pulling down CAD. So if I jump back to the charts, this happened, well, it happened here. So CAD was pulling down nicely, and I thought, great, I'm going to use my 20% runner, and we're just going to run all the way down, and you know, I would literally be waiting to take a trade down here. So the full trade on that 20% would become 500 or so pips, which is not uncommon for CAD pairs to swing like that. They swing really nicely. So yeah, price started to shoot back up, and I thought, okay, maybe there's a market flow happening, and with CAD pairs, the correlation is often oil. And being there no high impact news, I thought, okay, that's interesting. So dropped down to the hourly, and yeah, oil was just selling off like crazy. And so I said to the group, like, don't take any trades off of technicals on pound CAD. And the reason I said that is because usually what happens is once you've got another driver in the market that isn't a pure currency play, your technical analysis on the currency pair itself, this one being pound CAD, will not work out in general. So we can also look at dollar CAD, and we had the same spike up here. My level was just here on dollar CAD. So we didn't come close enough for me to get an entry. And I also wouldn't have entered here because at the time I thought that we had oil flows. And because we had this going on, I didn't want to take any trades until these levels here were hit, right? And at the time, I think this was like 4 or 5 o'clock in the afternoon. So price was sort of hanging at this point, whilst we were close to the levels on dollar CAD and pound CAD for that matter, if I wanted to take another short. But the reason why I wouldn't take the trade on the currency pair itself is because I would be waiting for these levels, specifically the second level because it's nearest to average true range, to get hit on oil, because I thought that the oil was actually driving price. What had actually happened, I documented in here, is that we had retail sales, which is not high impact news, but the retail sales came out pretty bad in Canada. So what that meant was that if you're looking at the economic chart, you would know that this week coming, we've got on Wednesday, the Bank of Canada's interest rate decision. So with retail sales coming in at an all-time low once again, it's more likely now that the Bank of Canada will have to intervene to help get the economy going. And how are they going to do that? They're most likely going to drop interest rates. And if they drop interest rates, it's going to be bad for the Canadian dollar. So this is just one of those things that, I don't expect everybody to know this stuff from the beginning, but the reason I talk about it is because this is the number one reason why most traders will keep doing the same strategy and get different results one week to the next. They don't understand that the market conditions have changed. You must always know what is driving price. If you know what's driving price, you're not going to get into a trade when a level gets hit if you know that something else is driving the currency play. If something else is driving it, you wait for the driver to hit a level and then you can take a trade on the currency that you're looking at, but not before. So I hope that makes sense. And again, this is like what happened this week was pretty, not high level stuff, but my explanation of it wouldn't be beginner friendly necessarily. I understand it can seem a little bit complex, but it's basically combining what's actually happening across the whole market with what you're seeing on the chart. And most of the time you can predict what's happening in the market by looking at the chart. But we don't try to. We just have to find out what's driving price. And knowing that was what was happening, but only after the fact, I decided I would just sit on my hands and stay out of the market. In this case, it may have worked if I'd actually entered a trade. But the point is, this is how you stay safe, and I keep all my profits from Tuesday, right? But when you start jumping in front of these things without knowing what's going on, it's when you start to give back. And I don't like losing trades. In fact, I have very few. And the reason I have very few is literally down to the fact that I want to understand what's driving the market. And pretty much the only time that I'll ever have a losing trade is if something changes. I'm either already in the trade and I didn't have an opportunity to get out and something changed and the market driver switched, at which point I'll just close the trade wherever I'm at. I won't wait for it to go 100 pips against me. If I know that the market driver has changed, I'll just get out of the trade, because I'm not trying to second guess. I don't want hope to become my strategy. The minute I start hoping that price is going to continue to do what I want it to do, that's when I know I'm already done, right? So anyway, hopefully that makes sense. If it doesn't, please ask questions. That's what I'm here for. But yeah, so that was pound CAD. But it had already come all the way down to here. And then when I saw that happen and I saw that oil wanted to keep going, because that's what I was looking at the time, I just managed to cash the rest of my 20% when we came back up to this level. But it may well be now that we just come up and we sell off again. But again, I'm not leaving it to chance. I just decided that because of CAD retail sales being low, there isn't really much reason for me to stay in this trade with my new bias that we're going to see CAD weakness this week. If we see that CAD weakness on Wednesday, and CAD could drop lower before then, but I would guess that we'll probably stay around this level. We'll spike up for the interest rate decision, and then we'll sell off. But again, not trying to predict it. I will just be waiting to see what happens. But this is just kind of like how you can translate what you see on the charts to what's actually happening on the economic calendar. So hopefully that makes sense. Right, on to dollar Swiss, which was the last trade I took this week. And this one I actually closed early, and I'll show you why. Well, the reason why was we had a bit of craziness with all that, with dollar dropping off and whatnot. So this one, I don't believe it was a weekly level. No, it was daily. So pretty standard stuff. I am quite vocal about the fact that I don't like trading Swiss pairs. The reason I don't like trading Swiss pairs is they barely move. So in a given day, they might move only between 30 and 50 pips. But yeah, closer to 40 most of the time. As you can see, like measure this candle here. So this is the daily chart. We only moved 35 pips last Wednesday. But on Wednesday this week, just gone, we actually moved 100 pips plus. So it's a really strong move. So what is the strategy? Strong move into a level. You got to take the level, right? So as much as I hate dollar Swiss or Swiss pairs in general, I was like, it's pretty classic move. We were way past ATR, I believe. Yeah. So we've come down, smashed through average true range, which is here, and we hit the level. And as soon as we hit the level, I entered the trade. And initially we got this reaction. And I think I had my original area of potential struggle up here, just below these wicks. But I actually moved it when I saw some interesting things going on with the dollar. And I just decided to cash the trade up here. So this was when it got hit around 3 p.m. on Wednesday, moved up to, did do about 26 pips, but I cashed everything around 22, 23 pips, something like that. So it was a decent trade. The level worked, but I wasn't sure if we were going to continue down or actually make a decent pullback from that. It turned out that it was actually pretty good. I would have had to withstand 20 pips of drawdown here. But if I'm honest with you, that would have played on my psychology a little bit. To see that on a Swiss pair, to be in drawdown on the first day of the trade, 20 pips on a Swiss pair. It's not the end of the world, but as I said, it's not really my favorite pair, so I would rather just not be in it. But my rule is, and what I tell everyone, all the traders in the community, is if everything aligns, you got to take the trade, right? So that's what I did. So management wasn't the best on this one. I could have held for longer, but I'm still happy with what I did because I protected my psychology. And as I say, protecting your psychology comes first, capital second, and profits come third. So in that order, you always stay safe from the markets. So again, nobody went broke taking profits. So another profitable trade for me. So that was basically the week in a nutshell. I'll just take a quick look now at some of the missed trades. That would have been nice. I had a mistrade on gold. Been journaling gold now for the past 4 weeks because I haven't traded it in a while. And usually before getting back into a pair, I will just basically paper trade it. And so let's just jump to it now. This was a weekly level. I believe. Well, it was this level here that had held up. So this, I think, we would have seen a decent reaction from because it had been used here before a big push away. So off of this level, it actually did over 200 pips, which is nice. It is gold, so it does move a lot. But yeah, so this would have been the move in here. So I would have taken the trade from around this entry. And I would have used these wicks here as the first area of potential struggle. So you can see it did do a lot more than that. It did 76 pips, but from that level, 43 pips were obtainable. But yeah, so that was a mistrade on gold. Won't go into it too much, just because like gold isn't something I've traded in a while, just paper trading it. So I just made a note and put it in my trade journal that that's what happened. And that's what I advise people do, is like, you don't need to be trading every single trade, right? Like get good at the majors and use the whole market to analyze what's going on. And then if you want to start trading other pairs, just start saying, I'm going to get in here at this level, and just journal it rather than taking it, because otherwise you're going to end up being a psychological mess, and it's just going to affect all your other trading. So that's what I advise there. Pound Aussie. This is one I wanted to cover just because it's one I'm going to be covering in more detail in the group this week. Basically with this, what you'll often see, you can go back here, right? So this was a weekly level that got hit, and we're looking at the same level again now, but this one was back in June on the 10th when this one got hit, and now we're obviously a month on. So a nice period of time to be away, and usually the longer you're away from a certain level, the more likely it is to work. So this, we had a strong move in. The drawdown on this one was around 18 pips, and then moved away from the level and did like 80 pips or so, 90 maybe. Yeah, about 90 pips. But what you'll often see with a pair like GA and other pairs is if you miss the first entry, as in you weren't in from this level when it got hit, what price will often do is it will come back and just tag the level perfectly. So obviously you've got to be aware of like any kind of change in market conditions. But if your bias, if you're in a really good area, as in we've been away from this area for some time, we'd pushed down, we'd made a push up, and it wasn't extremely likely that we'd smash through this level again, because there wasn't, let's say, there wasn't much news that was going to fundamentally change what was happening in the market. You can actually use the level that will get tagged once again. So here, there you go. Price came in, pinned the level perfectly, and then moved off for around 60 pips. So with that, you could have taken it level to level, which is what I would have done. I didn't in this case. I don't know why. Maybe it's like happened at 10 o'clock at night or something. So that would be why. But the next day it happened in the morning. So you can often quite catch these like Aussie New Zealand pairs where the move happens during the night. Of course, I'm talking if you're in like the West or the Middle East or something. But if you're way over in Australia or New Zealand, obviously you can trade these in real time. But it's just something that I clocked from my journaling, and that's why I say that journaling is so powerful. And then of course you've got that here. So what happened? We pushed up, strong move into the level. We hadn't hit ATR here, so it wasn't a trade for me, but I believe it happened during the evening anyway. So I don't really like taking trades just before I'm packing up for the day. But the next day we pulled away, we came back in and we pinned the level perfectly and then moved away. Again, level to level. So there's just 35 pips for you to take off the table there, relatively easy. So if you can build that in your trade journal and see it over and over and over again, you have every right to be taking those types of trades. So yeah. So anyway, those were all the trades and the mistrades. We've got a question from James on, do you also analyze if there's any liquidity? I do not. I honestly don't care about that at all. I ask myself, like, do I just kind of intuitively know that from watching the charts and what happens so much, or do I actually ignore it? And I think that the best way to summarize it is that I do just, I don't factor that in at all. I may factor in when I'm analyzing this, for example. So like, let's say we're looking at pound Aussie right now. It's quite clear to me that we haven't tapped into these levels here. So there's a whole bunch of liquidity waiting in that wick. somewhere, right? But because price wasn't going to get anywhere near that in the given context of the trading days that I was involved here, I'm not going to be looking to wait for that. I'm literally just waiting for the level, because price always has to pull back before it moves up, unless there's some crazy driving force in the market, which again is why I look for what's driving price. So as long as like there's no fundamental crazy conditions that's going to force us to be more defensive than we'd usually be, I just take the level. I don't care about liquidity or even think about it. So hopefully that answers your question. All right. So this is the part where we usually go into the week ahead. So what I'll firstly do is take a look at the economic calendar. And I recommend everybody does this on the Sunday before you're actually getting into the trading week. So you can actually make note in your journal of days that are most likely going to be a bit more volatile. And if you do this, you'll know when to trade defensively and when like not less strong levels, but levels that are closer to you. Like price doesn't need to be as volatile for them to get hit, is what I'm trying to say. So let's just plug this in. So we're looking at the week ahead. Sorry. So Monday, the week actually looks pretty decent until Wednesday. Wednesday looks mental, but we'll get to that. So Monday, we've got Euro retail sales at 9 o'clock in my time zone. Currently is GMT +3. So if this is, by the way, fxstreet.com/economic-calendar, for anyone that's wondering. There are others. This is just the one I like to use. I do have an app on the phone as well, so it does ping me. But if you don't know what's happening before it actually happens, I would slightly question your trading ability. Again, like first thing in the morning, just remind yourself what's going on today. So Monday, pretty clean day. Just probably going to get some euro volatility in the morning, so just be aware of that. Tuesday, pretty clean and easy day, and so nothing major going on. And so when there's nothing major going on, if we actually put this on a chart and let's look at, I don't know, pound, something that's fairly stable like euro dollar, most traded pair, right? So euro dollar, if I was looking at a level that wasn't as strong and price wasn't likely to get there today, like for example, we might, I mean, don't take me on this because I don't like that level at all because price gapped, but let's say this is only 20 pips away, right? So if it's Tuesday and there's not much going on in the markets, like there's no real news, I'd kind of expect it to be a pretty flat day. So my decision will be like, well, if we're coming up to a level that looks a lot better than this, but just for the sake of the example, I could take a trade from there. Or at least I'd be more inclined to than I would if we had volatility during that day. So that's all I mean by like a clean day where there's not really a lot going on. So Monday, once we get the euro stuff out of the way, Tuesday we've got a pretty clean run up until lunchtime. Or actually we've got some more, we've got Euro PMI. We've got all the PMIs on Wednesday. So Monday and Tuesday should be fairly calm days. So once you know that you can enter trades without getting smashed by some news or something happening, right? So moving on to Wednesday, we've got the Euro PMI at 10:30. So that's going to cause some volatility, potential volatility. Anyway, sometimes nothing can happen, right? But there might be something. So you just have to be aware of it. So we've got PMI. Then we've got the same thing for pound, just an hour later. An hour later. So pound PMI, that is potential volatility there. Then later in the day, we've also got as we looked at earlier, the Bank of Canada's interest rate decision. So again, I'm expecting CAD weakness off the back of this. But again, I'll review it in the morning. I'll probably just jump on around 4 p.m. GMT +3. So London time +2 or +1, sorry. And just have a look at where the charts are sitting to give some idea of like what might happen. So if we're sitting, or if we've been kind of like hovering by a level, and it's a high level, then it could be indicating that we are about to drop. If we're not anywhere near a level yet, that's my preference, because I'm not going to be entering trades if we're near the level and then just trying to guess what will happen. Do not do that. If you do that, you're just going to get smashed, and that's not how we trade. So if price is nowhere near a level, or at least like 70, 80 pips away, then I can slap a pending order on a strong level, and usually price will tag it and then make a pullback. So that's my ideal situation. Again, I'll review it on the day itself because the charts will have moved by then. And then we've got at exactly the same time, we've got the dollar PMI. So that time on Wednesday is going to be potentially very volatile. Just grab this questions coming in now. Regarding news and understanding, what is driving price? Sometimes there are multitudes of news that rationalize the understanding. Do you have specific structure of how to list these indicators? Limited. Yeah, just limited on text to post, sorry, news levels, etc. Specifically the Swiss dollar trade. Dollar Swiss trade that I took this week. Is that what you're referring to? And what was driving price? Do you have specific structure of how to list these indicators? Understanding what is driving price. There isn't, I'll try and answer your question based on what I understand it to be. Do I have specific structure? I have a specific approach that I would take. So if we start getting big moves in the market, the first thing I always look to are stocks. Are stocks selling off? Usually that's the transition between risk on to risk off, right? So if I see, and usually I'll just like flick to my chart where I've got all the stock markets on one screen, and I have it on the 1 hour chart. The 1 hour chart's usually enough to see if, if I can see some red candles starting to kick in, then that tells me that we've got a stock flow, at which point I will then switch to stocks being the driver. So I've charted up, the US 500, the US 30, the German 40, the UK FTSE, and the Japanese Nikkei, the JP225. So with all of that charted up, I'm then going to be looking for levels on those charts. So stocks is where I go first. If stocks aren't moving and we're seeing a price move, it could indicate that it's a currency play only. And if that's the case, then I'll look to, I'll actually go to Twitter and I'll have a look to see like if something has happened that I'm unaware of, because you have to remember random things can happen too, right? Like COVID. When it was COVID, it was ridiculous, right? It was just like somebody would say something in one country and then all of a sudden, or like they'd come out with like Italy's gone into lockdown and all of a sudden like the euro drops or something. It's like crazy stuff like that can happen. So yeah, but that's usually my process. I'll go straight to the stock market, see if there's anything there. If there's not, I'll check currencies. And if if there's no correlation between other pairs, like with dollar Swiss, or like, okay, is dollar CAD also dropping? Is, basically that. And then of course going to Twitter to find out if there's anything that I've missed. That's usually the best place. People spend like a lot of money on news portals and all this fancy like news feeds or whatever. Twitter's the best thing. Like that's all you need to go into. Right. So you guys can see my screen all right still, right? I just saw some weird notification on my live streaming software. Hopefully everything's good there. Where'd I get to? So that's the news for the week. So we got to Wednesday. So a lot of PMI stuff. So just be really careful with this stuff. We've also got the Bank of Canada press conference a bit later after the actual after the actual interest rate decision is released. So yeah, just be aware of these things this week. Thursday, we've got GDP on the dollar, and I believe we've also got it on the pound this week. I think it's Friday. So potential volatility on Thursday afternoon. Friday, we've got CPI Japanese CPI. So that will happen during my nighttime. So not much I can do about that. But what can I do with this information? I can make sure that I'm not entering any potentially volatile yen trades before Friday. So just knowing that this news is up and coming, I can correlate that to my charts and the levels that I've got mapped out for potential trades. Hopefully that makes sense. And then later on Friday, we've got more stuff on the dollar. So price index again, and I'm sure we had pound somewhere as well. I'm missing it. It's on Wednesday. Yeah, pound PMI. So anyway, that's the week. So, you guys can go to fxstreet.com or Forex Factory or whichever one you prefer to use for the calendar. My point here is just make sure you know what's up and coming for the week ahead, because that's going to correlate to your levels. Like I know, like if we look at pound CAD, I know that potential CAD weakness is coming. So let's just see how weak it comes, if at all. Like it could be totally wrong, right? That's the other thing. Could be completely wrong. But we might come up and fill some of the gaps on this wick. So one exercise I could do is go and find some more levels within this wick, because we haven't taken all of them out yet, right? So I think it's going to take me too long to scroll back and find now. But for example, that's the top of that one. Maybe there's something else in there. I won't go down to the 1 hour now to find something in there, but it could just be that we come back and re-tag it and then drop, So anyway, that's my point. So now let's just have a quick run through of the markets. This won't take long at all. And this is the thing, like once you're actually up and trading, you're doing this process every week and then adjusting your levels daily, there's not really any work for you to do. Like I tell people that it's literally like, I probably trade half an hour a day. That's it. Come on in the morning, check the charts, what's happened overnight, move any levels, adjust them, look at what could potentially happen today, which levels might get hit, set alerts, get on with my day. Like that's it. So trading this way is super basic, super easy. You just have to journal. And if you're journaling, you're actually going to get data. And with that data, you'll become a more advanced, much more confident trader. So GA, this level up here would be interesting for me. We've moved away slightly. ATR right now from Friday is on it. So probably as we move back a bit, ATR is probably going to be a bit lower, which would be nice for me because I like to see average true range get smashed and then the level get hit. So that's it for me. And then obviously if we continue down, may reevaluate this level here. Yeah, I don't really want to be taking that. That's just horrible. Like there's not really anything strong enough for me to be taking in there. So pound Aussie, like unless we get down here, I'm not really interested in doing anything. This is the other thing, like I trade all the pairs pretty much, even the ones I don't like. And when you do that, it gives you a lot more options, which means you don't have to try and force trades where they're not there. So GN, I've been waiting on this one. I think I marked this up on Friday. So yeah, on Friday, if we got up here, note how I don't like the idea of taking the first level. And the reason I don't like taking the first level is because we've got this wick here, which doesn't, just this one here, just doesn't provide me enough room from here to really make much of a trade. So I'd much prefer, and it's Friday, at least when I was looking at this, I'd much prefer the level up here so I can get a nice pullback that's actually worth taking the risk. So yeah. GU, we have pulled away quite a bit. If we zoom out on GU to the weekly, the reason I got out of the trade is I did think we had the potential to come and tap into these here. So again, not that I'm talking about liquidity, but we have come very close, and to move far away without actually tapping into it is quite unlikely. It could happen, but yeah, it could be that we want to dip a bit lower before pushing right back up here. We might need a bit more steam. So again, how we get there and how that actually happens is liquidity grabbing. But again, I'm not focused on that. I don't want to detract you from the fact that just wait for a strong level, strong move in. That's it. Take the trade. So pound dollar, really only if we get down to this weekly level. I don't really want to be taking any buys around here. If we do come up higher, this weekly level for me, for sure, would be taken because we're all the way down here now. So it's 175 pips back up to the top. And we've got about 50 pips of drawdown on these wicks here, potentially. So I might refine it depending on how we get there. But again, I'll adjust this each day. Yen pairs slightly recovered from them starting to move down. With this, I'll just have a quick look at the Japanese stock market. So Japanese stock market is still pushing down. Stocks are still pushing down. Yeah. German 40, FTSE's kind of consolidating. I'm just grabbing an idea of like what's happening with stocks, where they ended at least, because I was off screen on Friday from 4. So yeah, until we get a bit lower, I wouldn't be looking at any buys on yen pairs just for now. And again, why yen pairs? Obviously, if Japanese stocks get sold, you're basically trading stocks for currency, and the currency is the yen. So if you sell your shares, you get yen, which strengthens the currency. For those who are new, pound CAD, not really sure where this one's going, which is why I've cashed my whole trade there. But as I said, Wednesday we've got CAD interest rate decision from the Bank of Canada, so that's one to watch there. If we do go higher, then obviously the levels that I've already pointed out, but to be honest, we've already tapped the last level here that I would have been interested in. So unless we were to push all the way up here, it's not really a whole bunch there for me. I'd rather come down, tap this level, get a buy off of that. Pound Swiss. Swiss pairs, I'm just going to trade the really strong levels. Had the buy from here previously. Missed the sell up here. I think that happened last week, if I remember correctly. That was really nice. But on that, just nothing until we get back down to this level. CAD Swiss. Also, I popped this level on the chart, and just a way that I just refined that level. I think I had it maybe lower before, but it did actually work perfectly off of that. Just wasn't one for me. But the weekly level down here, definitely something to consider. Just a quick question from James again. So we got super. So stocks, gold, oil, currency moves, news. Yeah, pretty much. I mean, gold and oil don't always tell you too much. Gold, if it's like an Aussie New Zealand pair, gold can correlate quite well. Actually got like I'll be putting a correlation thing in the school community, so in leveled effects. So that should help people that don't know what the correlations are. But yeah, oil with CAD pairs, then currency moves, like just looking for any correlation across the market. And yeah, find out if anything's affected it. And it doesn't mean it's going to tell you what to do. It just means like you've identified what's driving the market. It is no longer you can no longer use your chart. That's what you need to understand, is that you just go, all right, the chart's not in control here. Maybe there's something else. And if it's stocks, you can use that to trade. Like, let's say you're looking for dollar Swiss. When US stocks hit a level, and they've been falling, right? So dollar has been strengthening. As soon as they hit their level, you could take a dollar Swiss short, right? And it might not even be near a level on the dollar Swiss, but you could potentially trade it blindly, knowing that when that pulls back the US 500, it means that basically people are buying back their stocks for a better price. So that's when you can get involved, if that makes sense. CAD yen almost came down to this level, but again, I don't like this level because price gapped. As you can see, we closed here and then reopened here, so I'm not really sure I like that too much. Probably move that up to just here. Nothing really of interest on this. There are these intraday levels that might work, just because next week we haven't got too much news at the beginning of the week. But again, it's a CAD pair, so just be wary of that. CAD weakness will obviously pull this thing down. So how we can look at that is like, okay, well, if we consolidate here, what would be nice if we just consolidated, and then we had the move down on Wednesday. So that's a 200 pip move almost, which would make this level a lot more interesting. So that's just how I would use the positioning of what's happening on the charts along with what's potentially coming up in the economic calendar, if that makes sense. EA, just worked off of this level here, so that's kind of cool, but not really a whole bunch here. Maybe this 4-hour candle body close there, it aligns with ATR. But again, just depends how price gets there. Jay says, when will the lessons be posted in the course? Wednesday. So for any of you guys that have not yet joined Leveled FX, you go here. I'll drop the link in the description box below this video. But yeah, you basically come here, you just join, it's free. And we've got the classrooms in here where the course will be housed. It's not currently in there right now, but it's coming this Wednesday. So if you're watching the replay on this, it's very, very close. And there's some other stuff you can win as well. There's leaderboards, gamification. So if you're active with the community, you post stuff, you gain likes, and yeah, it's kind of a cool thing. And on the calendar, we've got these live calls every Sunday, and also I do one on the Wednesday where it's literally just I post a link in the group. It's not on YouTube. It's a private Zoom call, and that's when traders in the group can ask me questions about setups and stuff like that. So if you haven't done already and you're interested in learning how to trade, learning the actual skill you need, this is my thing. My goal is to have 100 funded traders in the next 12 months, meaning that I will teach you how I trade. You will obtain the skill, and then you'll go and take funded challenges using what you've learned, acquire other people's capital, and then scale up to hopefully 7 figures. So that's that. Back to the charts to get through this. So yeah, EA could be a potential sell from here. Again, it just depends how price gets there and the market conditions, right? So Monday and Tuesday should be fairly easy going, but we have got the Euro news on Monday. So, you know, a strong Euro might pump us up there. If it's not too extreme, then we could take that trade quite easily. So yeah, I'll go ahead and actually put a notification on that, because I think that could be a nice trade if we don't get much of a reaction from the Euro news on Monday. I'm just going to speed through these because I know we are approaching the hour. If you guys do have questions, I don't mind hanging about or doing a bit longer. It's just for those people watching back, don't want to make these videos too long. EN, so this could be nice, right? We've got the weekly level, which is up here. So this is all I do, right? I know that we've got a bit of news coming on Monday. We are slightly past ATR on Euro New Zealand from Friday. Something might happen on this during the night, but I expect we'll probably pull back to the level, and then we might get a move up, depending on what the news is with Euro. But if we get a bit of Euro strength, we might be able to get up into that level, and that would be a great sell area for me. So yeah, keep your eyes peeled on that. And if you don't want to take the trade, just because I'm not saying that I am taking the trade, it just depends on how price gets there. If price gets there how I want it to get there, I'll take the trade, and then we can talk about it next week. Euro dollar. I really thought euro dollar was going to continue on up, but we've had this big sell-off which aligned with pound dollar last week. So you got pound dollar here. So this is a correlation, right? But at some point this has to end, because we haven't had a major pullback. We hit these wicks here on Friday, and we pulled up 17 pips only. So we haven't really hit any major level. I don't like this level here. I'm going to actually remove it because it gapped. So price closed here and then opened 10 pips below. So when that happens, I'm just not confident in the level at all. I'd rather trade off of something like that where price actually moved up from. Not a strong move away, but it was a clear level that got used. EuroCAD, again, waiting on Wednesday for this. That CAD weakness could pump the euro up. We've obviously got the euro news as well. So it may be that euro news gets us up here. We can take a short, and then we kind of consolidate waiting for news. and then the news comes out, we get CAD weakness, we pump up to here, and we take the pullback on that. So again, that's how I just correlate news with the charts, and everything would become a lot clearer on the Wednesday when the charts have played out and we're sitting at a particular place or price. You'll be a bit easier to identify what's going to happen from the news. Again, not trading news, trading levels on the chart, but I'm explaining that news turbocharges the charts. So yeah, Euro Swiss, sorry, I just glazed over that one. We did have a drawdown like this, like we did previous on other Swiss pairs. Don't like that at all. But if we got down there, that's a daily level for me. I would have to take that. Will we get there in the next day or two? Unlikely, given the fact that Swiss pairs move so slowly, but you never know. So Euro Swiss, that would be a strong level for me. So if we had a strong move in, have to take that all day long. So hopefully that is clear. Like if you see that strong move in to the level, which is for me, it's the daily candle body close here, you've got to take that level. Euro pound did actually work off of this level this week. I do not trade this at all. I know I said I trade all currency pairs, but look at this. I mean, what's that? Like a 40 pip gap or something. So yeah, this pair barely does anything, like 20 pips in a day. So I would only ever entertain trading it from like the highest of highs and the lowest of lows. Euro yen, not much here. Looks like we're doing a bit of a break and retest at the weekly level. Don't like that gap. That's kind of nice. That sort of area. But yeah, nothing for me there right now. Maybe a push up, but if we did push all the way up there, that's quite a long way for Euro yen to go. It's over 300 pips. I would, if we had that much of a move, I think the level may just get smashed and be an indication that Euro yen wants to go higher. If you zoom out, it doesn't really look like it's sold off at all. It's just still within structure. So the likelihood of it going up, still very, very likely. Aussie dollar, weekly level down here. So definitely keep an eye out for that one. If we were to push back up, we did just miss the weekly level above, but I take that daily body candle close refinement as one to be traded. So just up here. So if we were to push all the way back up, it's a nice strong 150 pip move in. So definitely be looking at that. So again, I get a notification up there. And hopefully you can see that I really don't care what happens with price, whether it goes up, whether it goes down. Like all I care about is how it gets there and whether the level it moves into is strong enough. And then I'm going to just check myself by looking at where other pairs are in the market. Do we have any market flows? Like why has price got there? Is it a pure currency move or is there another driver in the market? If there's another driver in the market, what is it? Can I use that instead? If I can't use that, I don't trade. That's it. Aussie Swiss, this level looks quite good. Oh, it's adding too many alerts there. Neil Levesque. Aussie CAD moved away from here. Maybe we come back, kiss it, and then go down. But again, it's a CAD pair, so going to be waiting on this low here. I don't like that consolidation too much. But yeah, my preference would be a move higher, tap into these highs. Again, we'd have to take that CAD weakness and get up there. That'd be great. Aussie New Zealand, this level actually worked pretty nice. This was I think a daily candle body close from over here. And on Friday, it hit and then had a nice 50, 60 pip move away, which is cool. Aussie yen. Nothing for me on that until we get down here. I've got an alert set already. New Zealand dollar. I was waiting for this on Friday, but we didn't quite get there, as you can see here. So this is my logic. Strong move in, and then this was off the back of the dollar strength. So we had New Zealand weakness, and none of the other pairs had really moved all that much. But we could have taken 30 pips off the table if we'd got there. We didn't. So I don't know. I'm just going to see what happens overnight. Markets open in about you know, 8, 9, 10, 11, 12, 5 or 6 hours. So when they do, we'll just see what happens with New Zealand. For me, I'll just wake up and see what's happened and see whether or not that's still a level I want to take. New Zealand CAD is also moving down to that area. Probably want to avoid taking any CAD pairs until Wednesday. Apart from Euro CAD, which might get a bit of a move on up into these levels off the back of some Euro strength if we do get that from tomorrow's news. New Zealand Swiss, this may already be working off the level, I don't know. This one I didn't want to take just because we've got a 60, 70 pip wick in there. So that gold level's the weekly. If I can, and I couldn't really refine it. Like this is the 4 hour now, and I believe the 1 hour is also, could refine it down to this, which would reduce the wick size to about 25. And at that point, you could use the second weekly as your backup. So I haven't discussed backup levels this week, but if you guys aren't familiar with my trading style, I don't enter trades usually unless I've got a backup plan to. So if the level actually breaches, my second, what am I saying here? If the level breaches, I usually have a way of managing the trade back into profit from a backup level, and I'll identify that before I get into the trade. So here, for example, if I wanted to take this as a level, I checked like where the next level is going to be. All right, 70 pips away. So my ultimate stop, I don't use stop losses in the traditional sense, is going to be well below this level, and then I'll use this level as the backup. So, you know, in a given day, also, if there's no crazy driver of price and it's literally just the currency move, then I can be pretty sure that if this level, which is strong, gets breached and we're past ATR, then this level is definitely going to work today, right? I don't like to say definitely, but still, it's like a much higher probability. So I usually try and always have a backup level if possible. And if I can't have a backup level, then I'll just make sure I take the very last level that price could potentially get to today, rather than taking one too early on and being caught out. So no trade is better than a shit trade. So I do not care if I miss trades. As I've shown you, like last week was pretty busy for me. I had 5 trades. If you look at the other videos that I posted to this channel for the last 3 or 4 weeks, I think I've had like 3 or 4 trades each week. Even four trades is quite a lot for me. So I can still do the numbers with like a few trades only. It's all about just scaling up your account size and trading safely. That's it. New Zealand yen, unless we get down to this weekly level here, not really interested in doing anything in that. Just see what happens with the Japanese stock market as well. If yen pairs continue to push down, dollar yen pushed up a bit more than other yen pairs because we had dollar strength kicking in on Friday. So we've had a bit of a pullback from this level here, whatever that is. Was it a level? You could argue that was the level. But again, that's it's just a line within a very horrible price action. So not a tradable one for me, which is why I wouldn't put it down as a missed trade. You can't catch every pullback. It's just if price is moving to your level, then it gives you a chance to get in. Dollar CAD, again, we had that CAD weakness off the back of retail sales on Friday. So this wasn't anything that I was going to entertain. If we got up here, I mean, could definitely look at getting involved. But yeah, the price was moving quickly and I didn't understand why, which means I'm not getting involved. Dollar Swiss, if we were to move down to these lows, I've got an alert set down here. That would be interesting to me. Swiss yen, again, another yen pair. I'm not really looking at doing anything with that. Gold, if we were to get down here, definitely interested. Yeah, I think gold could pull back to there. If not, then I will just come down and see if there's any intraday levels. But I don't really like this price action here. It's just too corrective for me. Like I'd much rather see like a strong move into the level like this. And if we got that again, definitely take that on gold. Silver, working nicely off this weekly level by the looks of it. I didn't think this level would hold again because as you can see, it's been used here, it's been used again, and then moved away. And then we've come back into it once again. So I think there's a bit of drawdown there. 26 pips. Yeah, so we'll see how that plays out, but it looks like it's just smothering the level at the moment, which just see. But anyway, that's it. I'm going to wrap it up there because we are an hour and 15. Prediction for this week. Are we going to see continued dollar strength? Not sure. We failed to make a higher high. I think we could be still coming lower on that. Just got to see. But hopefully everything that I've said here today in terms of like how to use the whole market to know which trades to take and which ones to just sit on your hands and not do anything. That's the main thing I wanted to get across today, is like how to trade safely, especially after the moves we saw on Friday with CAD and stuff like that. Because I just know that for me, this was one of the things that really used to catch me out. I think I would have been a lot more confident as a trader earlier on if I had this understanding, because, 1 week, like every trade worked. And I'm like, I'm a genius, 100% hit rate. All I need is levels. And then the next week, market flows, levels got smashed. I lost money. Why? So I think understanding the why part is the differentiator between like being a trader that lacks the confidence to know that their levels are good. Your levels probably are good. Finding a level isn't difficult, but just reading the rest of the market and just remembering to check like what else is going on. Stocks are all down right now. See if we can take out these lows from over here. If we can take out these lows, it looks like we might be getting a lot of dollar strength off the back of that. But stock markets dropping doesn't necessarily mean the dollar will go up. It's just, that usually is what happens. But if that doesn't happen, then obviously there's something else going on and you need to go and find out what. So yeah, anyway, there is one more question I did miss. You ignore liquidity because your trailing levels allow enough range to not have the trade closed out. Yeah, exactly. So the question here is basically like, well, the answer, I guess, helps with the question. The answer is that I don't use stop losses in the traditional sense. So usually, I suppose, in other trading systems or strategies or whatever you want to call them, like these ICT, smart money, whatever it is, this stuff, I imagine they use liquidity as something they want to put their stop loss behind or something like that. I just don't use stop losses in the traditional sense. I just factor in, like, it's kind of like a hybrid between the swing and day trading, what I do. So with that, it just allows things to be a lot more calmer and, not get stopped out for a trade that you were right about, but, you got tagged for like 2 pips and then a winning trade, what should have been a winning trade, became a loss. Like, it just fucks with your psychology so bad that I just think it's really difficult for new traders to trade with a strategy like that. And also if you're not just like trading all day, I also don't know how people manage to do that with like other stuff, like a job and stuff like that. Like, I can do pretty much anything in my day after I've done my analysis and wrapped up, put my alerts on and whatnot. I can pretty much just go out for the day, and all I have to do when I'm entering a trade is just have a quick look through TradingView on my phone, just see what stocks are doing, see if there's any market flows occurring. If there are, and I'm off screen, I probably won't take any trades and I'll miss out on some market flow opportunity, which is fine. But if nothing changed and the reason for entering the trade is still there, I'll just enter the trade whilst I'm off screen and things will play out generally. So yeah, hopefully that answers the question. Anyway, guys, thank you very much for joining. We're at 1 hour 18 now. Hopefully this has been useful. If you are interested in learning more, obviously Leveled FX is here. The link will be in the description. If you're watching right now, you can just go to school.com/leveledfx, or you can go to myname.com, jamesdownton.com/free, and it will redirect you here. Other than that, I will wish you all a good rest of the Sunday, and I'll catch you on the next one. Anyway, take care, guys. Cheers.